Hey everyone. So we're here to talk about the R word, regulation. So it would be an understatement to say that 2022 was a tough year with massive, spectacular blow-ups. We don't need to name names right now. We all know, been following the space. So let's start with a bit of an existential question, whether or not regulation or more regulation would have prevented any of these spectacular collapses. So, Nitin, let's start with you.
Yeah, I'll go. Coming from banking, I think it's pertinent. So I think what we've seen in 2022, we've seen about $784 billion worth of value being erased from the ecosystem. And largely, a lot of these Luna and Celsius and FTX were really centralized. This is Bernie Madoff like ecosystem that happens all the time despite all the regulation we have in our financial services industry. We still see evolution of a different kind of fraud that we've seen in this case. But a large amount of sort of fraud that has transpired has actually transpired because of rug pulls. These are economic flaws in the protocol. These are challenges. And I think in many cases, I don't necessarily think that regulation would have prevented them. I just think it would have surfaced a better governance that would have helped us to have better exactly what we've done with our infrastructure today is look into ensuring that we are doing all the due diligence needed to run a business. I think that was missing in this piece. So I'll pause at that and love to get others' thought as well.
Pierre, I think you have an interesting perspective on this, right?
Yeah, for me, crypto regulation, we talk a lot about anti-money laundering and counterterrorism fight and so AML though. And I like to say that we have to switch and to add to the AML, we have to add ALM, the asset liabilities management that all the financial institutions are doing today. They have to provide a lot of reports, a lot of to monitor. What if we had in place for FTX a stress test? Okay, what if tomorrow morning 50% of the customers are asking for their money back or the crypto back? So maybe if we are able to put this kind of regulations of rules and tests, monitoring to this kind of exchanges, basically they are financial institutions, they are centralized, and they have to take care about the assets they manage. And regulation should help.
I would like to add, so if you're talking about regulation of crypto, there are different worlds. We have one world, this is DeFi, decentralized finances, and the other world is decentralized thing of something. I would say if you look at the previous events happened, FTX, for example, I have still this picture in my mind. We are sitting in front of the US government and explain we are regulated by a lot of entities and we are doing very good job. And at the end, what we have seen, $8 billion of US dollars, maybe more, were lost. And we were regulated. And if someone comes and say to me, we should regulate DeFi in the same manner, I would say no. We should rethink it. It's the same with the different protocols we have seen in DeFi space. They are implemented in different manner. They do the same as you see in the traditional finance, for example, Uniswap pools, AMM, but it does completely different, it uses different approach, more secure, more transparent approach. And for the regulation DeFi, we need a completely different approach. My co-founder said once, if a person can fail, this person will fail for sure. And this was happened with FTX. And in DeFi world, we have smart contract based implementation, and maybe we should apply a different approach for regulation on smart contract level and avoid to use people in between to make it more secure and transparent.
This is directed towards you, actually. Everyone talks about the need for regulation. We want real regulation. I don't real in quotes, right? But what is that, and what are the benefits of a regulatory framework, Teana?
So, sorry, I've kind of lost my voice. I will do my best. It's been a lot of talking. I think the first thing that we need to consider is what is the activity that we're regulating. So we don't necessarily, at the regulatory level with policymakers, they're throwing kind of crypto or digital assets into one bucket, into one basket. And I do think that we need to be really specific about what the asset is, because not all assets are financial instruments, for example. And how is the market activity being conducted, to Sergej's point. So what is real regulation? I think there's areas where we have been very clear that there is market activity that mirrors or is likened to other types of financial market activity. And those exchanges or those on and off ramps where digital assets come into contact with traditional payment systems or traditional finance. It's the same risk, same regulation. It should be the same activity. However, having said that, when you look through the lens of where DeFi and centralized finance may come together, then I think we're going to need to be a little bit more bespoke about how we look at how we treat those. I think your original question was, would regulation have prevented FTX? And I think that there are some key areas where the risk would have been lessened. And that's the thing. Regulation doesn't prevent bad things from happening. Regulation is designed to reduce risk. And so the segregation of customer funds, for example, that potentially would have been something that could have been risk reduced. But ultimately, FTX, and there was an article written that, all the crypto people are saying that, the FTX collapse was fraud. It's not just crypto people saying it. It was fraud. And it was a demonstration of abhorrent and lack of corporate governance and a lack of due diligence on people who chose to fund that business. So I think there's lots of things that went into that failure that don't necessarily have to do with regulation. But I also think that we need to be careful in being specific about what we're talking about and being realistic about the governance models we put in place. Because if you can't supervise it and you can't enforce it, and I think this is what Sergej is talking about with, there's not a person there, there are automatic markets, for example, then the regulation has no teeth and there's no point.
Got it, thank you. And how do you put regulation or government policies or government mechanisms in place without stifling innovation and growth?
Yeah. So I'll take this, right, in the sense that I think here's the balancing act, and here's a message for the founders and investors. In general, and I've been working in this for quite some time, working with the regulators, helping them understand the impact of technology and the innovation that's behind it, is the fact that oftentimes it's instrument and activity. What are you spending and the infrastructure that's supporting, which is all regulated, right? If you look at our industry in general, you have a series of tokens, you have NFTs, and oftentimes the notion of fungibility is a little blurry. You use different kind of instruments to make payments. You use different kind of instruments as value exchange, and that really blurs the traditional definition of what a security is or what a commodity is and what a payment instrument is. And the existing regulatory framework has evolved over 100 years, right? We've evolved over things we've made to protect the consumers, to protect the system, and the infrastructure itself. In fact, many of you may or may not know that payment systems are regulated. All the infrastructure, all the technical componentry that goes behind it. So the balance or the disconnect is exactly that the industry to say, are all these instruments payment instrument, or all these instruments represent a stake in a company that makes them a security, versus can we now live in a world that we can rely on the infrastructure, and it's up to us to educate the regulators to come with a new framework. So to apply the old 1930s regulation, for example, to existing framework, I think would be a mistake. It still protects it, but it actually stymies the innovation that many of us are trying to achieve. Circle and 1inch and likes is hurtful, I think.
Sergej, you want to weigh in?
Yeah, I agree. We need to educate as much as we can. We are very fast. In decentralized finance, we are very fast. Every month we see new projects, new protocols coming, and we cannot apply the traditional regulation to the DeFi space from our point of view, because almost everything is different. Yeah, and that's from my side.
But I do think the challenge, I think, again, the industry needs to be very specific about what the recommendations are. We are now at a point where we can't say, well, you can't regulate the DeFi the same way that you regulate traditional finance. There's got to be this is the recommendation for how we do this. This is how we can manage the same risk using the technology in a different way. And I think if we go back, AML is a great example of this. A few years ago, there was a real concerted effort by global standard bodies to put in place standards that every country in the world was going to adhere to when it came to preventing financial crime. And some of the expectations that we could apply some of these tactics around the world immediately were not, we weren't able to do that. We're still, for the most part, implementing these directives that came from the Financial Action Task Force. However, in those conversations, the industry said there's lots of other ways that we can manage this risk through, for example, zero knowledge proofs. But still today, 3 years later, I don't know of a good solution that would meet the travel rule requirements using zero knowledge proofs. So I think we have to be able to make recommendations how we're going to manage the risk, and they have to be, reasonable, that they will work. And so, if anybody in this room is thinking about founding a company, being able to manage risk in a different way so that we as an industry don't become over-regulated, that I would strongly encourage you, if you know how to create that, to do so.
Yeah, we talk a lot. We talk about innovation and zero knowledge proof. Those very things that sometimes are quite difficult to explain to regulator. Explain to crypto companies are educated for that. But a very short example of what this week I had a call with a huge asset manager in France, and who is planning to launch crypto services or crypto asset management to his customers. And for very simple things, how many for Bitcoin, how many ops, how many transactions you can go in the back, how many ops you need to check before validating a transaction, the French regulator was unable to answer. And so if we, even for very simple stuff, sometimes, we have a guideline from FATF, or we have potentially the European directive and MiCA coming. But at the end, what is the very simple rules that need to be applied by this by the company? It's something that still needs to be defined. So we can imagine that if we are going further, how we will regulate DeFi, how we can implement the regulation where there's no, let's say, centralized authorities in charge.
Administrator,
administrator. Yeah. You can, or you do stupid things. You sue the developer. It's a very, so you have a very large scope between simple things that need to be understood and how we prepare the future.
I get this question a lot. What about on the protocol level? Is we need regulation there? I mean, is that even a thing?
On the protocol level, so we see like protocols like Uniswap protocol, which is completely permissionless, and I would say trustless, and have actually no administrator which can freeze the funds or move the funds. I think there's no need for regulation in the terms. It makes sense to have regulation on the client level. I call client a DApp, for example, which offer access to the smart contracts. Of course, everyone can just interact with a smart contract, but it's very complicated. And normally, users use wallets, use the DApp from Uniswap, for example, to provide liquidity. And on this side, maybe it makes sense to regulate in terms of, the DApp provider, like in Uniswap case, it's Uniswap Labs, which is sitting in New York. They should use TRM Labs, for example, to screen the wallets and only allow not malicious actors to interact with the protocols. I guess this makes sense, but like really on protocol level, it's very difficult. Except you build it extra for institutionals. So in our case, for example, we are building an environment for institutionals. You need SRO license, for example. Then you need to do KYC, ML checks, and just verify that in this kind of closed environment, these people interact with verified actors inside of it.
So I think this has been, last year we had this infrastructure bill we had DCCPA, we have 40 bills in the US pending, figuring out as to what do we do with this. And one thing that came up is exactly element of protocol, because none of the technical protocols today are regulated. However, those technologies used to build the financial system, that's regulated, right? So the debate goes back to, is this really a free speech issue? Because code is free speech in the United States. We also look into the fact that can we then rely upon having the same prowess that we've seen from internet? And so I think the conclusion that came from various regulatory or college of regulators was around the fact that we look into, so protocol is nothing but a set of rules. We look into who's setting those rules, and if it's a marketplace, who owns the marketplace, who runs it. And by labeling it decentralized, that's another open issue where we look into saying that, do we have a safe harbor? Because at some point, somebody is launching this, somebody has a website as an entry point, as it was discussed earlier. And if you're onboarding a client through this web page, then you are responsible for some activities that Sergej mentioned. So it's a little hairy thing that just because something is decentralized doesn't necessarily make it unregulated. So I'll pause there.
Yeah, I would like there's a big challenge now, maybe, because not to integrate directly the protocol, because it makes no sense that a protocol is regulated for sure, in my point of view. But maybe there's an opportunity that we can directly bring a lot of regulatory checks directly in. At the level of the protocol. So a smart contract could ask information directly, because the beauty of DeFi is done in 1 second, and it's the clearing settlement are done at the same time. So if we're able to solve, you talked about just before by the decentralized identity. So I know there's a token, I know with whom I can interact, and then directly at the level of the app, decentralized app, to check that we comply with the regulation. And then it will be a big step, or two big steps in the meantime.
Yeah, I think identity is another huge issue, and we've sliced that pie so many times in saying what does truly DID or decentralized identity identifiers imply for the industry, because much of the prudential regulation that we look into requires you to understand who are the players behind these, and that requires financial institutions to not simply rely upon individuals to disclose what they want to disclose. But that becomes an FATF requirement in many cases, right? So it's a hairy area.
The digital identity issue is something that you're really passionate about, right?
Yeah, I mean, personally, yes, very passionate about it. I think that if we're moving into this Web3 environment, the solutions that we had coming into this from a Web2 environment start going to work. And we have the ability now to basically prove that something is true without giving away all of our information. I also think that as data accumulates exponentially, and I think the previous presenters' comments around, you're the product now, and not having the ability to permission which data about yourself you're giving to whom, I think is very complicated. And if we could solve that that digital ID conundrum, then a lot of the money laundering risks that we have today would be solvable through other types of technological innovation. I think that we would actually catch more money laundering sooner. We have all of these elaborate processes and the Bank Secrecy Act and all this stuff, and we catch like 1% of money laundering today. So it doesn't really work anyway. I also think that for future innovations, especially when we look at things like CBDCs, there's a number of countries that are not necessarily considering all the privacy implications, and certainly aren't considering digital ledger or open source blockchain technologies to enable these CBDCs. And if that is the direction of travel, I find that critically concerning, that our everyday money that we use, and the access that wholesale or commercial banks or private stablecoin issuers might have to permissioned money that then captures information about us and reports it back to the government, I find really concerning. So I think that if you think about all the things that we're talking about here today, and the role that your personal privacy and your right to that plays into it, I think that the digital ID issue should become critically important to all of us.
And crypto, just the global nature of crypto. In terms of global standards, is there any particular area of the world that is kind of taking the lead, or you think is just being the leader for everyone else right now?
So, in my day job, I do have to design systems that are compliant because we are a global financial institution. It's top of mind. Of course, we are also a GCF, which is systemically important financial institution. So, but there are two things, right? One is there's a little bit of the application of existing financial regulatory infrastructure to the existing asset or to the new asset class. However, if you look at why we all got into the space, like why I got into the space, and this space has transformed drastically in the last decade or so, was whatever we're building is a truly global system. These are global networks. These are global assets. They have, like today, if you had an Ether or Bitcoin, the rules of engagement of how you engage with the DeFi protocol are exactly the same no matter where you're in the world. And that is a very powerful thing for things like financial inclusion and inviting entities to come to the ecosystem and competing for talent and capital all around the world. So you have a global marketplace of sorts. But when we look into this in terms of what we call as a bookend problem, which is if you're transacting two countries and you begin to enforce certain regulatory elements, then you're creating what the term we use in the industry is regulatory arbitrage, which creates all kinds of gaps. But these are connected systems from the get-go. There is no SWIFT, there's no other disconnected financial infrastructure that some fintech is trying to connect them together. And I think that's a problem, that if we start applying these new roles and forget the global nature of this ecosystem, then I think we're missing the point.
Pierre, how about MiCA? I mean, do you think MiCA is? We expect that to be passed this year, right?
Yeah, and at least MiCA, it will offer a global regulation to the whole Europe. And today, if we have a directive and European directive and guidelines, you can have different rules. It was a company has to get a license in France, in Luxembourg, in Germany, whatever. And now, so you facilitate with the passporting and also to define clear rules. Maybe MiCA and no, I'm not checking every day where they are because they have there's some discussion that I'm waiting for the final text and then how it will be implemented, and because there will be another timeline of 24 months. But at the beginning of the year, what we are afraid that it was good for the big corporation, like the incumbents, and because what was expected for small players to enter in the game was like having a lot of guarantee and so on, that was sometimes very difficult for them to provide. And so it was like, as you said just before, it was not compatible with a good innovation. But I'm sure that anyway we are always. I think people are already talking about the next MiCA, MiCA 2, because they know we start something and the NFT was not there, and then there's okay, so we have always like one step behind and beyond, and yeah. So I'm glad it's okay because it will provide some kind of global framework and clarify a lot of things. But regulation will always evolve, and again, there is, you said also that you need to educate and then to follow the trend is quite sometimes difficult.
So, I mean, I have maybe a slightly more nuanced view on MiCA, whatever we want to call it. So essentially, the competitive advantage elements for Europe are arguably pretty good, right? You now have to apply in one country for one license, and you can passport across to the other 26. That clarity and certainty for specific market actors is huge. It is very specific legislation, way more specific than we get in the US. And so that certainty, I think, for builders and innovators and people looking to set up a business is hard to argue with, right? It's pretty good. When you look at the way that some of the provisions treat other types of market actors like stablecoins, it's a little bit more complicated and there's a lot more nuance. And I think the first mover advantage that Europe finds itself in can be potentially, a competitive advantage, but it also gives other jurisdictions who are a little bit slower this kind of pause period to see what within MiCA might these other jurisdictions want to do differently. The UK for example, very close, used to be a shared market, is now not. And so can they approach some of these provisions in a way that provides them with a competitive advantage? The other thing is, as MiCA gets kicked down the road, so it was supposed to be January, they're translating this legislation into 27 languages. Then it was February, and then yesterday they've announced it'll be April. So will it be April? We don't know. But basically 12 months from April 2023, stablecoins will be regulated in Europe, and 18 months from that time, all other market activity, except for DeFi and NFTs, will be regulated activity in Europe. The other thing that we're seeing with Europe and European policymakers is basically a world roadshow to promote how great MiCA is. And, we've got congressional delegates coming over from the US to visit Brussels to learn about how great MiCA is. And so I think that there is this, certainly from Europe, this desire to have other jurisdictions who haven't yet made some of these decisions align to MiCA to provide some global consistency. And there's certainly appetite from other jurisdictions to see if this works. But a whole-scale holistic approach is a bit of a risky move. It's big, right? Where other jurisdictions have kind of gone market activity by market activity. So I think it's a kind of wait-and-see situation, to be honest with you. And I think we're going to continue to see other markets, certainly the UK, Japan, and Singapore, probably in that same time frame, 12 to 18 months, also come up with regulation for marketplaces and stablecoins, almost certainly.
I know time's running out, and I don't want to end on doom and gloom. So I want to go down the line, and we'll start with you, Sergej. What are you most excited about in 2023? And is this the year that we're going to rebuild confidence in the industry?
I'm excited about new teams building new innovation products, decentralized storages, different new tools to build leverage positions on-chain. Currently it's a good time. It's a kind of bear market, crypto winter, and it's a good time to build. So we started 1 inch on a hackathon. It was also bear market. We were like not about to earn money. We were there just to build something nice, what is useful by other people and helpful for everyone. And I guess this year we will see more and more, a lot more projects coming up. Since there's no hype, there's no room for scammers, abusers who pump the shit tokens and try to collect the money and rock everyone. And real developers develop in this time good projects, which helps also as well. Yeah.
Pierre?
I hope bear market, even if it's still snow outside. But for me, maybe from my point of view, I see a lot of big corporations, financial institutions, traditional, very interesting in providing something interesting in crypto. So I think I don't think they will all succeed, but it will give a good signal for all the economy, or the crypto economy, or the crypto companies that okay, if the big ones are entering the game, it will validate all the development that have been done by crypto companies for years and facilitate that development, I think.
Yeah, so while I think the contagion of incompetence has sort of dampened the mood in terms of what, and I certainly think that as someone like SBF who had all the access, but the positive, and he didn't take advantage of that access, he went the complete other way, which may have some implications. But I think that the DCCPA, MiCA, Stable Act, which is expected to pass next, this is progress. I mean, I spend a lot of time with regulators in DC, I'm sure you do too at Teana as well, very receptive. They want to understand this, but they also understand the risk of not doing it right. And so I think, to me, all these bills are a step in the right direction. It's a progress that we need to understand and make. So that's something I think is exciting in 2023.
So this is my third bear cycle. And before that, we didn't really measure it in bears and bulls. It was just, chaos. And what I've seen through every, bear market is this opportunity to build. So, when you're in the middle, of a huge bull market, you're really focused on kind of capitalizing and your go-to-market strategy and the growth momentum. And during a bear market, you have time to really think about what you're doing. Is it meaningful? Is it valuable? Is it providing utility to the space? And we saw that happen in a big way after the ICO bust. And I think we've seen, even by looking up and down the promenade this year at Davos, that the majority of the blockchain, Web3, crypto companies that are here, you probably know what they do, because it's very utility focused, and you can point to how what they're doing is providing real innovation. So I think hopefully coming out of this bear market, we'll see the same and more growth.
I want to thank my panelists, Nitin, Pierre, Sergej, Teana. Thank you very much
Thanks,
for your
Joanne.
insights.
Thank you, Joanne.
Thanks.